RBI Governor Sanjay Malhotra మీడియాతో మాట్లాడుతున్నారు. ఇప్పుడు లైవ్ చూద్దాం.
Resilient as key indicators stay robust. I would like to mention over here, and especially because there has been commentary in the media about the Reserve Bank's exchange policy. Well, the Reserve Bank's exchange rate policy over the years has remained very, very consistent. Our stated objective is to maintain orderliness and stability without compromising market efficiency. The Reserve Bank believes in the market efficiency of the markets that we have in India for Forex. Accordingly, our interventions in the Forex market focus on smoothing excessive and disruptive volatility. It does not target any specific exchange rate level or band. The exchange rate of the Indian rupee is determined by market forces, and we will continue with this policy. Coming now to liquidity and financial market conditions, I may state that after remaining in surplus from July to November 2024, system liquidity as measured by the average net position under the liquidity adjustment facility did turn into a deficit during December 2024 and January 2025. This drainage of liquidity is mainly attributed to advanced tax payments in December 2024. You are aware there are quarterly advanced tax payments to be made, December being that particular month, for the advanced tax payments for.
Short break తీసుకుందాం. Stay tuned. RBI Governor Sanjay Malhotra మీడియాతో మాట్లాడుతున్నారు. ఇప్పుడు లైవ్ చూద్దాం.
To meet the requirements of the system. I now come to financial stability. The system-level financial parameters for the scheduled commercial banks continue to be healthy. The credit deposit ratio for the banking system at the end of January 2025 was at 80.8%, broadly similar to that on 30th September 2024. Bank liquidity buffers are sufficient, though the net interest margin moderated, return on assets and return on equity are robust. The system level parameters for NBFCs too are very healthy. I also take this opportunity today to mention that the Reserve Bank has been observing Financial Literacy Week annually since 2016. This is with the purpose to enhance financial education in our country. Last year too we did this campaign. This campaign was focused last year on empowering youth adults. This year, recognizing the critical and multifaceted role of women in society, this campaign will emphasize on women's role in financial decision making and household budgeting. I sincerely urge all banks to actively participate in this campaign on the theme Financial Literacy, Women's Prosperity. It starts from 24th of this month. Now, before I conclude, I shall be announcing some additional measures. Necessary directions and circulars for these shall be issued separately. First of all, on digital security, the rapid digitalization of financial services has brought convenience to all of us, at the same time efficiency, but it has also increased exposure to cyber threats and digital risks, which are again getting sophisticated day by day. The surge in digital frauds is a matter of concern. It warrants action by all stakeholders. The Reserve Bank has been taking various measures to enhance digital security in the banking and payments system. Introduction of additional factor of authentication for digital payments is one such measure. It is now proposed to extend this to online international digital payments made to offshore merchants who are enabled for such authentication. Second, the Reserve Bank shall implement the bank.in exclusive internet domain for Indian banks. Registration for this domain name will commence from April this year. This will help avoid banking frauds. This will be followed by the fin.in domain for the whole of the financial sector. The banks and NBFCs, I would urge them to also continuously improve preventive and detective controls to mitigate cyber risks. They must develop robust incident response and recovery mechanisms, reinforced through periodic testing for operational resilience. Third measure that I am announcing today, over the past few years, we have expanded the suite of interest rate derivative products available to market participants to manage their interest rate risks. We shall now, to this suite, include forward contracts in government securities. This would facilitate long-term investors, such as insurance funds, to manage their interest rate risk across interest rate cycles. It will also enable efficient pricing of derivatives that use government